Strictly speaking, disability insurance is offered by private insurance carriers to employer groups and individuals to replace income in the event of illness or injury. If employed, ask the employer's human resources partner about short-term disability or long-term disability cover plans as part of the benefits package. Disability insurance can ease the financial burden when a primary wage earner suffers an injury or serious illness. Disability insurance is quite different from workers' compensation coverage. Disability insurance covers the insured's illness or injury that occurs anytime or any place. The disability doesn't have to be work-related. There are two basic forms of disability insurance coverage. Short-term disability insurance pays the insured a part of his or her income for a specific short period after he or she uses time off bank days. Depending on the individual plan, short-term disability typically pays benefits from 9 weeks to 52 weeks, or a full year. Most short-term disability insurance plans pay the insured about 50% of his or her weekly wage as a benefit. Long-term disability insurance pays a portion of the insured's income after he or she uses time off bank days and short-term disability coverage, if any. Depending on the insured's plan, long-term disability may cover the insured for a certain period of time, such as 2 years, or until the insured reaches a specific cutoff age, such as age 65. In most states, short-term disability insurance isn't a government benefit. Workers in all states other than California, New York, Rhode Island, New Jersey, and Hawaii must pay premiums for private short-term disability insurance and/or long-term disability insurance. If an employer doesn't offer short-term disability or long-term disability coverage as an employee benefit, it is possible to purchase an individual policy directly from an insurer or through an insurance agency. An individual policy is more expensive than an employer-subsidized group plan. The coverage period time over which the insured is able to receive benefits and the amount of benefits provided depends on the insured's age and premium costs. If injured, the insured's short-term disability cover usually pays out the first weekly payment from 1 day to 2 weeks after the employee's disabling injury. In many companies, employees must use time off bank days before requesting short-term disability benefits. Some employers carry two types of short-term disability coverage, one for on-the-job injuries and ailments and one for sicknesses or injuries that occur outside of the workplace environment. When an employee is disabled for a longer period than the short-term disability coverage term, the insured's long-term disability insurance, if available, or permanent disability takes its place. Again, the long-term disability insurance or permanent disability payments could be triggered from 10 weeks to 53 weeks after the insured's date of eligibility.